Welcome, everybody. There's only 2 minutes to go to the cash open here on this Friday morning. Spoos, I gotta tell you, I could have been somebody. They were down 80 handles last night. I'm not gonna lie. I was getting a little excited about the project over there. Look at the volume this morning because of that kind of wild ride. Almost 600,000 contracts. That does it for me, man. That just does it for me. Also, 300,000 contracts in the bonds. Check this out. It's not just record volume. That's the kind of volume you see in an entire trading session. And that happened. Anyway, we're back on the bid inside of the S&Ps. And here's again, the entire session this morning comes down to one thing. It's going to come down to the SPX. We're basically opening this morning on the lower edge of the expected move. It's annoying because we've been talking about it now for 3 days. 3 days. So on Wednesday, we hit it. On Thursday, we were all over it and stuck to it. Here we come into the open on Friday. Where are we? We're on the lower edge of the expected move. The entire trading session, though, is about making or breaking around that move, which I will discuss in some extent. So yeah, the bonds are starting to rally. They got wild last night though to the upside, reverted back down. Some interesting moves on the screen. I'm rather surprised about oil cooling off this much, but yeah, we'll discuss that after the cash open. Coming into the open, Netflix is the talk of the trading community, but it shouldn't be. I mean, it was expected to move $40, and guess what? It moved $40. No surprise there. We're going to come into the cash open. It's going to be rather sloptastic. It's a sloptastic market into the open. Advanced decline line, sloptastic, and ticks are going to be all over the place. Let's come to today's cash open. When I mean sloptastic, I mean it. You have basically what, almost a 50-50 advanced decline line. If there are any standouts, they're predominantly news-induced standout. There's your Netflix, which is down what, about 7%? There it is, about 7%. Again, moving right to what was anticipated. The ticks this morning scattered and broken. Again, exactly what we had kind of surmised there in the pre-market. It's a slump fest, and you're welcome to join it. So the morning, okay, is all about obviously the expected move. So inside of the SPX, I'm going to bring up my my magic drawing tool over here. But inside the SPX, here's your level. Bear with me as I actually draw this up over here. Here's your level. It is 50.23. Where we're presently trading right here, right now, is in theory, we've already broken off the downside of it. And it's it's actually why this just the morning few minutes of trade here is rather critical, because any push lower from here is going to be a significant push away from the lower edge of expected move. And what the implication of that is, and that's the most important thing. Like, oh yeah, we're pushing off. When I say we're pushing off a level, okay, I wouldn't take that lightly. You start to push off of a level, and we're not there yet, but if you start to push off a level, everybody has to hedge in the dynamic of that. When I say we're not there yet, it's because we opened right here, we haven't done anything yet. I mean, again, you're not even 2 minutes, full 2 bars into trade yet, but I'm not ready to call this thing dead. One of the things that you have to recognize is we're in a pretty heavy volatility situation. And this level, okay, the 23, although absolutely, pivotal for this marketplace, specifically this morning, the level there's a lot of freedom around it. And that has to do with increased amounts of volatility. Typically we would say, 12 points higher or lower than these levels, and we would be breaking off. And you can see, evidently, there's at least about 20 points of freedom at this point around this expected move. And by the way, 20 points, it sounds like a lot, but it's actually not that significant given the fact that you're in a $100 expected move. Okay, the S&P futures traded, 90, 80, 90 points below where they're presently at. Okay, I mean, just take a quick glance over here. We traded down substantially. I mean, I glanced the futures yesterday afternoon and evening, and they were down like 80 handles at one point. But pretty important to denote that again, we're not broken free. We're not just free falling here, not even close to it. There is another interesting facet of the marketplace, and that is volatility spiked. It's reverted back down a little bit. The vol futures have cooled off a little bit, but these volatility futures, they jumped into backwardation last night. They've cooled off just a little bit this morning, but there's only about 25 cents differential between front and back month. So that's going to be important to watch. Now, at this point, you're thinking I'm all bared up, but I'm not all bared up in this move. On the contrary, again, just like yesterday morning, the highest probability for trade has to be here. It has to be. Okay, that has to be the highest probability. It's not what you think. Okay, it's the probabilities on your screen that you have to trade off of. Now, that doesn't mean, look, I'm very aware that hedging activity paved a substantial path lower last night. Very aware of that, which does in fact increase some of the odds of the possibility of slippage later today. But again, in the open over here, you always have to go with the probabilities. Even if you see stuff on the screen, you're like, we're going to break down. You still have to trade with what is, in effect, a higher probability. Now, that being said, if I say that this is the highest probability of where we're going to go, you're like, wow, that's only like, 15 points higher. Yes, it is. However, okay, so let's say that we rally up 15 points from where we presently are. Okay. On the flip side, even though that this is a higher probability, we'll put a probability of like 70% chance we're going to go right back here. On the flip side of this, okay, and this is exactly what I was explaining yesterday, if we do trade lower from here, it's going to be substantially lower. And you look at this, and even though you're like, oh, but there's only a 30% chance of going down. But if there is, okay, to the downside, you could lose 30, 40 points very easily. So we'll assign like, 40 point, move on the downside. That is the initial, like, let's call this the first, hour of trade today. That would be kind of the setup in my head for it. And by the way, if you're wondering where I got the 40 points from, I just pulled that crap out of thin air. I really didn't. What I'm not telling you is in the SPX, excuse me, in the SPX, today has an expected move. Again, today has an expected move of basically 40 bucks, right? So I did not, I did not pull that out, right? Anyway, with that, yeah, if my mic's low, turn up your damn volume. It was a loud song. It's a good song. It was a loud, good song. It's good stuff. In any regard, that's that kind of two-sided setup that I wanted to provide to you guys this morning before we get, let's not get too crazy. The ticks this morning, right, which are showing as unavailable right now. The ticks this morning, you'll often hear me say on days like this, okay, that things are, if you will, scattered and broken. What I mean by that is, look, okay, New York Stock Exchange tick is up, S&P tick is up, Russell and Nasdaq ticks are down. That, okay, defines scattered because they're going in different directions, and broken because they're going in different directions. Yeah, actually, I'm going to bring Jeff on here in a few minutes. So that should be interesting. we're a little short-handed today. We have Gianni De Poce, which is he's on his way to Italy. And I think that Corey right now is over in Europe somewhere. The hell? Yeah, I know it's the exchange rate. Okay, look at this. It's the exchange rate that's got him going. Actually, Gianni has not only family there, but he has a house there. So it's tough. It's tough. He has to pack up and go to Italy for a couple of days. And I was talking to Gianni yesterday, just chatting with him on off the side of my desk over here. And I come to find out, I'm like, oh man, you got to get on a plane and you got to go all the way to Italy with a wife and two kids because one of the kids is a little tiny baby. And he turns around, he says to me, he's like, no. He's like, I'm going with my brother and my dad. I'm like, come on, man. Now I'm jealous. Now I'm jealous. Um, you get to go to Italy. Okay. So I said something to my wife like later in the day. She's like, oh, you can go. You can go to Italy with them. She's like, just don't come back. So I got that going for me. Nasdaq is starting to really come apart over here. By the way, be mindful right now of what's going on expressly inside of the Nasdaq versus the financials. Now, for those of you that have been around a little bit, I was very bullish in financials to the point where I actually put on let's see if I can actually find it. I have so many accounts in Tasty now that I have to scroll through them. There we go. I put on a bullish position in the XLF. I put on a bullish position in the XLF for Catapult, thinking if you will, that there'd be a rotation back towards financials to some degree, and kind of away from tech. And we are actually seeing that, but this is starting to get interesting this morning because there is some big selling going on in Meta. There's some decent sized sell side activity going on in NVIDIA. Meta is actually catching my eye right now because on a percentage basis, it is leading the pack lower. So let's take a quick glance at some of the order flow in here. Look, there's a lot of calls being sold and there's a few puts being bought, but don't get ahead of yourself. This size is not significant yet. We are seeing right now, okay, a very substantial rotation of capital. The rotation of the capital is we're mildly selling tech, okay? We're absolutely buying energy, and there's big buyers inside of financials. So this is going to split out the advanced decline line quite readily. There is a very deep concern on my behalf this morning, even though I kind of gave you that little model of like, if we go up, it's 15 points. If we go down, it's much more substantial. There'd be one critical concern this morning. The advanced decline line is abundantly positive now. It's picking up. That's actually not a good thing, in my opinion, for this morning. And I know that people are looking at there like, what do you mean, man? It's a positive advanced decline line. Look, I can find something bearish in every tape I look at. And I'm now, in all seriousness, why I don't like this advanced decline line, which is absolutely getting better. It's not because it says it's going down. It's just the issue, and what is at issue this morning is if you look at stocks like NVIDIA and you look at stocks like Meta, and Meta already bounced a little bit here. But if these are to continue, okay, to go down, it could get ugly out there. Very, very ugly, and ugly in a hurry. So be aware of it. The reality is you could have 90 stocks trading to the upside today and an S&P that was basically flat, okay, because big tech is weighing on markets. Big tech has to rally like right now, or what can occur is big tech will start to pull everything else with it, including the financials. So we're going to see how this one plays out, but yeah, mark my words on there. See if I can actually adjust some of my audio settings in here. I apologize, my voice is shot. I'm shot, man. Oh yeah, I can make this louder. That's weird. it should be automatically adjusting, but it updated. So you'll excuse me as I raise my mic volume. Here we go. That's much better. Yeah, no, my voice really is shot. You know what though? I just realized like my earpiece here, I'm actually turning down the earpiece of it, but turning up the microphone. The reason I'm doing that is when I bring Jeff Bierman on in here, he's gonna scare the living crap out of me. That's not gonna be good for nobody. Okay. Yeah, this is a less than enthusiastic kind of cash open here. Like I'm a little bit disappointed. All right. So yeah, no, it's weird. So Zoom should automatically like adjust my settings, but it updates itself and sometimes it screws up the settings. So that's good. Yeah, no, my voice is shot. I'm trying to speak at a regular tone. My voice is shot. I got in-laws at the house. Just off me right now, okay? Uh, so there's a little bit of a bid back to NVIDIA. There's a little bit of a bid back here in Meta. Meta, though, looks like it's hanging on by a thread. So again, anything but decisive trade this morning. Costco has a bid back under it, but we are fairly deep in the money in here. I just want to bring up the Costco trade for a moment because take a quick glance over here at account statement. I'll show you some of the fills. So 218 is where we sent the trade out, and we sent the trade out on the 16th. So it's trade date plus 3 days. So you have the 17th, the 18th, and the 19th. And the way I see it, today is the 19th. So if you can get out with a 30% gain, we would do it today. So what's a 30% gain? It's 218 times 1.3. You would get out basically at 283. So I've been working orders in and around 283. Watch, I'm going to create a duplicate order. Okay, hit confirm and send the trade. What I want you to see, okay, not that I'm working an order, what I want you to see is right here is the price that I am trying to fill, 283. Right here is the mark. The mark is the mid price, okay, that is present in the marketplace, right? So we're 260 like in the live market, but we're trying to offer this for sale at 283. Are we going to fill? No, but the day is young. The day is young. And this thing came within 3 cents yesterday. 3 cents, okay, of being filled. I was getting excited about the project. It did not happen. Yeah, interestingly enough, the S&Ps, okay, I'm just looking at Costco for a second. But interestingly enough, so the S&Ps are just starting to lift just a little bit here. But as I said, this should be the higher probability. And there was this, here we go. We're reaching right for it. So now I'm going to draw on the screen exactly what I would anticipate. We came down here, did a little dance, made a little love. We're going to come up here. Everybody's going to think it's a huge rally, and we're going to sit on this line, okay, for a period of time. What period of time that is, I don't know. There's a chance that you get your face-off rally today, which I know that people are anticipating, but I keep reiterating a very simplistic point, okay? The waters of the marketplace, okay, if you will, have been well chummed, okay? There is a little bit of blood in the water, not a lot, okay? But this is where retail gets very, very nervous. This is where fund managers get nervous too. There's some sell side activity. And by the way, when I say fund managers, I don't mean mutual funds. I'm talking CTAs. If you're not familiar with that, there's a lot of firms out there that are like proprietary trading firms. They call them all kinds of stuff. There's hedge funds, the proprietary trading firms, there's CTA. Okay, there, let's just call it what it is. Monkeys trading their own money. All right. A lot of monkeys trading their own money. And some of the monkeys trading their own money, trade a lot of money, and they trade it in some of the most simplistic fashions. When we're bullish, we buy. When we're bearish, we sell. And the problem you've got right now is when I say that they've chummed the waters, okay? When I say they've chummed the waters, you get a marketplace that is actually, sold off a little bit. Now everybody is looking for the exit. So every time that we bid, okay, which is natural. By the way, this is not like this dip buying. Look, eventually you got to cover your shorts. You got to explode back to the upside. It is the hallmark of volatility. But people get caught up in the most ridiculous terminology. It's the people buying the dip. Okay. As somebody that used to hedge a portfolio, I am telling you right now, sure, you're going to have people that are going to try to hop on board. They're going to try to buy this. Every time you try to buy right now, okay, you're going to get sold into every time. Okay. The only way you can go back into a rally right now, okay, is to see that quintessential, it's like short covering that actually turns into real buy side. And there is so much psychology though right now in this marketplace that to me seems very prohibitive. I do believe we could have the big quintessential rip your face off rally, but think about the psychology behind it. And I don't usually go down the psychology road, but you're coming into a weekend where there's geopolitical crap fest going on. All right. There's no question about it. And I sit here on this Friday morning and think to myself, look at the watch and go, I got about 6 hours to the cash close. Do you want to go home long? You saw that crap sell off last night. You want to go home long? Okay. I'm not being facetious. I'm dead serious. Do you want to go home long? Because right now, I'm telling you, if you're long like a couple thousand deltas, you're out of your freaking mind. They're going to hedge them. They're going to hedge those deltas, which means to hedge deltas, you got to basically do something bearish against the bullish deltas, right? Everybody else is thinking the exact same thing. So every time we try to rally over here, okay, and again, I don't usually like to get into the psychology of that crap, but you saw a geopolitical crap fest. And moreover, don't, don't take my word for it. Look at the SPX because the SPX does a better job of delineating, okay, what a crap fest means. So I might call it a, geopolitical crap fest. You want to know what a geopolitical crap fest means in the SPX? Look at options that are April 22nd. When's April 22nd? Monday. Somebody has a case of the Mondays. Anyway, you look over here and that says 60 bucks. Now, today hasn't ended yet, but that says 60 bucks. When was the last time you went into a weekend and there was a $60 expected move? You do realize, hold on, just hold your thought there for a second. Okay. Right back here, this expected move for the whole freaking week, and I know it was a 4-day trading week, was only 58 bucks. Sick how I remember that, isn't it? It was 58 bucks for the whole freaking week. Yeah, it was a 4-day trading week. Now we're looking at a Monday with a $60 expected move. Okay. Coincidence? I think not. No, it's important to know that what I am basing, my little political crap fest theory on is hard numbers. I'm just trying to translate it into common English, okay? Which at times I'm not all that great at doing. It's not like I'm an English literature major. I'm looking at you, Jeff. Okay. By the way, I'm bringing Jeff on in like 8 to 10 minutes. I'm already starting. I'm getting warmed up for it. Okay. You need more coffee before I bring him on. I'm ready to fight. It's all going to be okay. Look at this. So we tried to come right back up. Oh, we got close. Every time they try to buy, they push them back down. It's not over. As I said, there could be the big rip your face off rally. But from my point of view, that's not going to be my money. Okay. I mean, I really mean like just because I'm short, I'm not sitting here. Ooh, we're getting close on Costco. Costco, we're really close on Costco right now. Costco. Anyway, just because I'm short, I'm not trying to paint a picture around my present positions. I don't give a damn. It's been a good week. Okay. It's been a good few weeks because when there is no sell side activity, now we're, one, two, this is the third week into lower edges of expected move. I'm almost ready to crack a smile. This is about it. I will tell you this though. Last night with the S&Ps down 80, I'm like, oh, this is good. My wife's like, it's not good. It's like war breaking out, and I'm like, okay. So I won't tell you it's good, but it's really good. Yeah, that's a sick reality of being a bear. Okay, that's come on. There are a few bombs. Nobody had to get hurt. Okay, it was just strategic bombing. Strategic bombing. No one has to get hurt. Strategically bomb. Okay, couple more. It's okay. Sick and wrong when you're rooting for things that you shouldn't be rooting for. It's but again, and doing this a long time. So as I reiterate, we've had like a 10-point range over here since I've opened up. As I reiterate, I just it caught my attention again. The advanced decline line is so okay. Furball. The advanced decline line is again, it's a little bit alarming. You don't like to see, and my point of the advanced decline line is a simple one. You don't like to see this positive of an advanced decline line with a marketplace that can't seemingly get out of its own way. Like, this is a point in time where you better rally or we're going to fall flat on our face. That's kind of the thinking over here. Anyway, just looking back at a few underlyings. So right on the dance floor, I'd be surprised if Costco didn't fill at some point today, just kind of in the natural volatility of things. Let's cruise back over to NVIDIA for a second, and then I'll talk about Netflix, and then we'll bring on Jeff. So NVIDIA, the reason I'm looking at it, not just because it's down, what I'm so curious about, yeah, this is kind of what I thought. I don't see, there's nothing definitive in the option order flow right now, like some call buying, but there's some call selling. There's some put buying, but there's some put selling. There's nothing definitive, right? This is, I mean, it might as well just be unchanged. And I want you guys to know that I don't give a damn that it's down 0.8%. It literally is a non-event right now. But if order flow starts to kind of break out, like they start to buy puts or buy calls, it's going to change the way you feel about this marketplace. Additionally, Meta was getting beaten up a little bit this morning. You're kind of thinking like it was getting beaten up quite a bit more, but it's ready to pop. Again, the question looms in Meta: what does the order flow look like? And what's very interesting in Meta, there's a lot of call selling. What that implies is, people blew out of positions as the stock traded down. They literally blew out of positions, when stock traded down. Generally speaking, people are not going to sell calls to open positions in like 0 DTE. And today, being Friday, would be theoretically a 0 DTE. Moreover, there's a very slight lean to buying puts in here. So I would suggest that Meta, this one actually does have some unusual options, activity, if you will. This could be on the dance floor to get smashed. I am not categorically bullish on Meta, at least at this point in the morning. So just, be aware, okay? And Peter said it's not broken yet. It isn't broken yet. I agree with that. But that's one where, you better warm up to the idea, because the option order flow, okay, doesn't exactly look right in there. Now, let's cruise over to Netflix, which I want to say this even before Jeff pops in here. I do want to say this. This is a complete non-event. This is not another one bites the dust. This is earnings, people. It's whatever. This is a complete and utter non-event. If you look at it as an event, all right, what are you smoking? What are you smoking out there? Because when something does precisely what it was expected to do. So from last night, it had a $50 expected move and it closed at 610. So it should have opened basically what? It should have opened. It's really, it should have traded, I should say, in and around the range of what? 560-ish? 560-ish? Okay. So it should have traded in and around the range of 560-ish. And holy crap, non-event, move on. Just move on. Like there's nothing to see here. Okay. And you're like, but it's rallying now. Who the hell cares? It did what it was supposed to do. Right here, if I tell you it's supposed to open at 560-ish, and it does, everybody that's anybody knows how to get out of their position. They wiggle, wiggle, wiggle. That's the highest probability. You're done. Game over. There's no event whatsoever. Like this one was accurate and this one was accurate. It's fine. Okay. Next week will be interesting. There are some big earnings coming out. And yeah, we'll see. We'll play ball. Play ball. Anyway, bear with me over here. I'm reading off the side of my screen as well. Okay. So S&Ps at this point. Okay. Massively unchanged this morning. Nasdaq kind of weighing us down. Nvidia is on the dance floor to do something which is absolutely nothing. It's really Meta that has kind of caught our eye. Apple is down about 1%. Okay. The only reason I am bringing this up, and I think I'll probably bring this up again with Jeff in a few minutes. Apple looks like it broke the support. Okay. And could be in a little bit of a free fall right now. Speaking of that, let's go to the QQQ and bring up auto expected moves. Auto expected moves is how far is the NASDAQ outside of the expected move? And the answer is very far, which leads me to believe, well, that's why there's some danger in today's trade in any regard. So let's bring in the Beerminator here as I'm gonna link them right now. We will bring in the Beerman. Okay. No, I better turn my freaking mic down right now. All right. I don't mean the actual microphone. I'm talking about the earpiece. He's going to come in here. He's going to get angry. Oh, you know what's nice though? He can't get actually in here without me approving him coming in here. That makes me feel better. Okay. So anyway, with that, I'm waiting. Okay.